Welcome, our shining stars. Yes, that's what you are. We believe that our accounting learners are definitely our shining stars. Remember, we spoke about the trading account. Now watch the trading account. What is this account all about? In my trading account, when my stock system that is being used is the periodic, I will start off my trading account with an item called opening stock. What is this? This is your stock at the beginning of the year that you transfer into your trading account. In other words, your opening stock becomes the first item on the debit side of your trading account. There you can clearly see it. Okay, now, if you recall from the previous segment, we said we closed off the purchases account to our trading account. Remember, in an exam, now we're doing examination technique. In an exam, if you are asked to do a trading account and the purchases account was not asked for, then grade 12s or any other grade in accounting for that matter, make sure that alongside purchases, you indicate all your figures in a bracket, indicating clearly that how did you finally arrive at this purchases figure. Show the calculation in brackets. Why? Because if you do this, then definitely you will get part marks for that. And you don't want to lose marks, do you? So therefore, whenever you are working, show your calculations, because definitely if you show calculations, you will earn part marks. Right. In the earlier segment, we alluded to expenses on purchases. In other words, we said that if you have an item like carriage on purchases for the year, then definitely you're going to show it on the debit side of your trading account, carriage on purchases. In fact, all expenses that you incur on your purchases need to appear on the debit side of your trading account. Think of items like what? You've seen carriage and purchases, and you get customs duties, you get import duties. All right, but remember, and this, you make sure that you make a mental note of it. Do not include carriage on sales, because carriage on sales is not a purchasing expense, but a selling expense. Please, I'm imploring you not to get caught out if you see carriage on sales and you include it in your trading account, because carriage on sales is a normal expense which will go to your profit and loss account. So watch out for that. It's what we call a red herring in accounting. Beware of the red herring. Okay, then your sales figure, and here we're referring to net sales. So for sales as well, you're going to indicate by means of a bracket. What are you going to do? What is it that you subtract from sales? That's right, your debtors' allowances. Okay, that figure is subtracted from your sales, so you will show a net sales figure. And then you bring in your closing stock at the end of the year, and finally you have your profit and loss account. Okay, let's move on. We've done all of this. Now, if you were asked to do a calculation of cost of sales, how would you do that? Remember, you start off with your opening stock, you add your net purchases, same would apply, show brackets if you have to, if there are amounts that you need to show, add your carriage on purchases, add your customs duties. Notice everything that you had on the debit side of your trading account. This would then give you your goods available for sale. Now, what did you have on the credit side of your trading account? Can you remember? You had your closing stock. Watch, it is indicated in a bracket to show you that you are subtracting. And yes, when you do this calculation, you are now After you take your goods available for sale and subtract your closing stock, you are left with your cost of sales figure. Now this is a vertical calculation of cost of sales. Remember guys, it's important that you know how to do the calculation of the cost of sales. If you are doing an income statement now, what's your income statement? You've got your sales less your cost of sales. There your cost of sales was given to you in a calculation. You did all of that calculation, and therefore you now say sales less your cost of sales would finally give you your gross profit. This is what we refer to as the income statement, and important when we are using the periodic inventory method. This is how your income statement will appear. Clearly, what we have done for you, if we have illustrated for you the differences between perpetual and periodic. Okay guys, yes, unfortunately, all good things come to an end, and yes, it's the end of another accounting lesson. But don't fear when Ashraf is near. Stay tuned to us because there are many more lessons coming your way. Keep your feet on the ground, reach for the moon, and yes, you will be an accounting star in the horizon of South Africa. Until next time, be good.